Based on the historical data and forecast, Bitcoin shows a fluctuating trend with periods of consolidation and upward movement. The RSI consistently stays above 50, indicating a bullish sentiment, though it dips below 60 on several occasions, suggesting potential short-term corrections. The Bollinger Bands have widened recently, indicating increased volatility, and the forecast prices suggest a continued, albeit slightly decreasing, upward trend. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the RSI dips below 55 and the price touches the support level of $90,500. The entry price will be $90,500. The stop loss will be set slightly below the support at $89,900 to protect against potential downside risks. The initial target price will be the resistance level of $93,800. To capitalize on the forecast slightly downward trend, we will implement a secondary strategy based on the Bollinger Bands. If the price touches the upper band, which is currently around $96,100, we will take a short-term profit at $95,000, with a stop loss at $96,500. The portfolio will allocate 60% to the long position and 40% to the short-term profit strategy based on Bollinger Bands. This approach balances the potential for sustained gains with the ability to react to short-term volatility and capture quick profits. This diversified approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, Ethereum shows a mixed trend with periods of consolidation and upward movement. The support price of $3,000 provides a strong floor, while the resistance at $3,340 caps potential gains. The RSI fluctuating around 60 indicates neither strong overbought nor oversold conditions, suggesting a neutral to slightly bullish sentiment. The Bollinger Bands have been widening, indicating increased volatility, and the forecast suggests a slight downward trend in the short term. Considering these factors, I propose a strategy that combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns. My recommendation is to initiate a long position at $3,160, coinciding with a slight pullback in the forecast and the middle Bollinger Band. Set a stop loss at $3,000, just below the established support level, to mitigate potential losses. The initial target price is $3,300, aligning with the recent resistance level and the forecast. If the price breaks through $3,300, consider raising the target to $3,340, the next resistance level. This strategy aims to capitalize on the short-term upward momentum while protecting against downside risk. The RSI is currently around 60, so we are not in an overbought or oversold position, providing a reasonable entry point. Based on the historical data and forecast, BNB demonstrates a generally upward trend with periods of consolidation. The RSI consistently fluctuates, but rarely reaches extreme oversold or overbought levels. The Bollinger Bands show the price has been trading within a range, suggesting potential for volatility. Considering these factors, I recommend a moderately bullish strategy. We will use an RSI-based strategy with a focus on capitalizing on short-term pullbacks. The entry price will be $930, coinciding with a potential dip in the forecast and a move towards the lower Bollinger Band. A stop loss will be set at $916, aligning with the established support level, to protect against significant downside risk. The initial target price will be $943, mirroring the forecasted price for January 20, 2026. To enhance returns, we will implement a dynamic target price strategy. If the price reaches $943, we will move the stop loss to the entry price of $930 to secure profits and reduce risk. If the price continues to rise, we will adjust the target price to $950, reflecting the upper Bollinger Band. This adaptive approach allows us to maximize gains while minimizing potential losses. The overall portfolio will be 60% allocated to this BNB strategy, with the remaining 40% diversified across other assets to mitigate overall risk. This strategy combines technical indicators with support and resistance levels to provide a robust and adaptable investment approach. Based on the historical data and forecast, XRP shows a downtrend with increasing volatility. The RSI consistently dipped below 80, indicating a lack of strong overbought conditions, and frequently approached the oversold level of 20, suggesting potential buying opportunities. The Bollinger Bands show that the price is approaching the bottom band, which indicates a potential reversal. Considering the forecast data, XRP is expected to continue its downward trend. Therefore, I propose a contrarian strategy focusing on short-term pullbacks within the downtrend. My strategy involves entering long positions when the RSI reaches between 30 and 40, close to the oversold level, and the price touches the bottom Bollinger Band. For example, on January 26, 2026, when the forecast price is $1.97, RSI is 45.8, and the bottom Bollinger Band is $1.84, I would enter a long position at $1.98. The stop loss would be set just below the support level at $1.95, and the target price would be the center of the Bollinger Band at $2.06. This approach aims to capitalize on short-term bounces while managing risk within the prevailing downtrend, potentially achieving high returns with calculated risk management. Based on the historical data and forecast, Solana shows a fluctuating trend with a recent dip. The RSI values indicate a period of consolidation, fluctuating between 46 and 68, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the middle band, indicating a period of low volatility. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $133. The stop loss will be set just below the support level at $132 to protect against unexpected drops. The initial target price will be the recent resistance level of $140, providing a reasonable profit margin. To refine this strategy, we will incorporate the RSI and Bollinger Bands indicators. If the price approaches $133 and the RSI falls below 50, we will enter a long position at $133. The stop loss will be placed at $132. If the price breaks above the upper Bollinger Band, we will set a target price of $140. If the price approaches the lower Bollinger Band, we will set a target price of $133. This combined strategy aims to capitalize on potential upward movements while minimizing risk through strategic stop-loss placement, providing a balanced approach to maximize returns. Based on the historical data and forecast, TRON shows an overall upward trend, consistently bouncing off the support price of $0.307. The RSI fluctuates between 60 and 72, indicating periods of both moderate and slightly overbought conditions. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Given the forecast prices are consistently around $0.316 to $0.322, I recommend a long position. Entry price will be $0.312, with a stop loss set at $0.307, right below the support level. The initial target price will be $0.322, aligning with the forecast and the upper Bollinger Band. To maximize returns and manage risk, I propose a tiered target strategy. If the price reaches $0.322, take 50% of the position and move the stop loss to the entry price of $0.312. If the price continues to rise, set a second target price at $0.33. This approach allows us to capitalize on the anticipated upward trend while protecting profits and limiting potential losses. This strategy combines RSI, Bollinger Bands, and support/resistance levels for a comprehensive approach to TRON investment. Based on the historical data and forecast, Dogecoin has shown a downtrend recently, with the forecast indicating further decline. The RSI consistently fluctuates, but dips below 40 on multiple occasions, suggesting potential oversold conditions. The Bollinger Bands show the price nearing the lower band, reinforcing the possibility of a short-term dip. Considering these factors, I recommend a short position strategy. We will enter a short position at $0.138. The stop loss will be set at $0.132 to protect against unexpected upward movements. The initial target price will be $0.127, aiming to capitalize on the predicted downward trend. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI drops below 20, indicating an oversold condition, we will hold the short position. If the price touches the bottom of the Bollinger Bands, we will consider tightening the stop loss to $0.129. If the price reaches $0.127, we will take partial profits and move the stop loss to the entry price of $0.138 to protect the gains and potentially benefit from a reversal. This combined approach leverages multiple indicators to maximize returns while minimizing risk, aligning with a high returns investment strategy. Based on the historical data and forecast, Cardano shows a downtrend with increased volatility. The RSI consistently fluctuates around 50, indicating neither strong bullish nor bearish momentum. However, the recent dip to 41.6 and subsequent recovery suggests potential for short-term reversals. The Bollinger Bands have widened, confirming the increased volatility. Given the forecast price decreasing from 0.395 to 0.365, a conservative strategy focusing on short-term bounces is recommended. We will implement a combined strategy using RSI and Bollinger Bands to maximize efficiency. Our strategy will involve a long position when the RSI falls below 30 and the price touches the bottom of the Bollinger Bands, aiming to capitalize on short-term bounces. For example, if the price reaches 0.365 and the RSI is below 30, we enter a long position at 0.365. The stop loss will be set just below the bottom of the Bollinger Bands at 0.344, to protect against further downside. Our initial target price will be the center of the Bollinger Bands at 0.375, aiming for a quick profit. If the price continues to rise, we will adjust the target price to the top of the Bollinger Bands at 0.375. This strategy allows us to profit from short-term volatility while mitigating risk with well-defined stop loss and target levels. Based on the historical data and forecast, Wrapped Beacon ETH demonstrates a fluctuating trend with periods of consolidation and upward movement. The RSI consistently hovers around the mid-50s to low 70s, indicating neither strong bullish nor bearish momentum. However, the forecast data suggests a potential downward trend in the coming week, with prices decreasing from $35.90 to $34.40. Considering the support price of $33.50 and the RSI nearing the oversold level, I recommend a contrarian strategy. We will initiate a long position at $3,440, anticipating a potential bounce off the support level. To mitigate risk, set a stop loss at $3,350. A reasonable target price would be $3,500, aiming to capture a portion of the anticipated upward rebound. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band around $3,440, it signals a potential buying opportunity, aligning with our RSI and support-based entry. The stop loss remains at $3,350. Our target price will be $3,500, representing a move towards the middle of the Bollinger Bands. This combined strategy leverages the convergence of multiple indicators for a more robust and informed investment decision. This portfolio combines the RSI, support and resistance, and Bollinger Band strategies for optimal efficiency. Based on the historical data and forecast, Bitcoin Cash shows a downtrend. The RSI consistently below 60, with values dropping to 41.6, indicates a weakening momentum. The forecast for the next week predicts continued downward pressure, with prices ranging from $590 to $578. Considering the support price of $558 and the lower Bollinger Bands, I recommend a short selling strategy. Enter a short position at $585, setting a stop loss at $592 to protect against unexpected upward movements. The initial target price should be $578, aligning with the forecast low. To maximize potential returns, I propose a tiered target approach. If the price reaches $578, take partial profits and move the stop loss to the entry price of $585. Continue holding the remaining position with a final target price of $558, coinciding with the established support level. This strategy combines RSI-driven entry, Bollinger Bands confirmation, and forecast-based targets to mitigate risk and capture significant gains in the anticipated downtrend. The portfolio will be 60% short Bitcoin Cash, 20% cash, and 20% in other assets. Based on the historical data and forecast, Pudgy Penguin shows a downtrend with increasing volatility. The RSI consistently falls below 80, indicating that the asset is not overbought, but the recent decline suggests potential for further downside. The forecast prices continue to decrease, reinforcing the bearish sentiment. Considering the support price of $0.00868, we can implement a contrarian strategy. We will enter a long position at $0.0104 when the price touches the lower Bollinger Band. The stop loss will be set slightly below the support level at $0.009 to protect against a further decline. The initial target price will be the center of the Bollinger Bands at $0.0118, aiming to capitalize on a potential bounce. To refine the strategy, we will incorporate a trailing stop loss. Once the price reaches $0.0118, we will move the stop loss to $0.0108, securing partial profits and limiting potential losses. If the price continues to rise, we can adjust the target price to the resistance level of $0.0135. However, given the overall bearish trend, a more conservative approach is recommended. Therefore, the final portfolio will prioritize the initial long position at $0.0104 with a stop loss at $0.009 and a target price of $0.0118. This strategy balances risk and reward while acknowledging the prevailing market conditions. Based on the historical data and forecast, Pump.fun shows a slight upward trend. The price has been fluctuating within a range between $0.00259 and $0.00266, with the support price consistently at $0.00259. The RSI is currently at 54.5, indicating that the asset is neither overbought nor oversold. Considering the Bollinger Bands, the price is approaching the upper band, suggesting a potential for a pullback. Therefore, I recommend a long position strategy with a conservative approach. We will enter a long position at $0.00261, placing a stop-loss order at $0.00259 to mitigate potential losses. The target price will be set at $0.00272, aiming to capture a modest profit while acknowledging the potential for a short-term price correction. To refine this strategy, we will incorporate the RSI indicator. If the RSI falls below 20, indicating an oversold condition, we will initiate a long position at the prevailing price, setting a stop loss just below the support level at $0.00258 and a target price at $0.00275. Conversely, if the RSI exceeds 80, signaling an overbought situation, we will consider a short position with an entry price at the current market price, a stop loss above the resistance level at $0.00267, and a target price at $0.00255. Combining these three strategies, we will prioritize the long position at $0.00261 with a stop loss at $0.00259 and a target price at $0.00272 as the most efficient approach given the current market conditions and forecast data. Based on the historical data and forecast, Cosmos Hub exhibits a slightly upward trend, though it has been oscillating within a range. The RSI consistently above 60 indicates a generally bullish momentum, with recent values nearing overbought territory. Considering the forecast, we'll implement a combined strategy leveraging RSI and Bollinger Bands to maximize potential returns. Our primary strategy will be to identify pullbacks to the lower Bollinger Band as potential entry points, confirming with RSI levels. We'll enter a long position at $2.49 plus $0 when the price touches the lower Bollinger Band and the RSI is below 70. The stop loss will be set at $2.35 plus $0, just below the lower Bollinger Band, to mitigate potential losses. Our initial target price will be $2.54 plus $0, aligning with the forecast price and the upper Bollinger Band. To refine this strategy, we'll incorporate RSI signals. If the RSI dips below 30 during a pullback, indicating an oversold condition, we will delay entry, waiting for confirmation of a bounce. Conversely, if the RSI exceeds 80 near the upper Bollinger Band, we will consider taking profits early. This combined approach aims to capitalize on both momentum and volatility, providing a balanced strategy for high returns while managing risk. The final portfolio will prioritize the combined strategy with a slight adjustment based on RSI and Bollinger Band signals, with an entry price of $2.49 plus $0, a stop loss of $2.35 plus $0, and a target price of $2.54 plus $0. Based on the historical data and forecast, DECRED shows a strong upward trend, breaking through the resistance level of $25.8. The RSI indicates that the asset has been overbought several times, but the price has continued to rise. The Bollinger Bands show that the price has recently been near the upper band, suggesting continued upward momentum. Therefore, I recommend a long position strategy. We will enter a long position at $20.4, placing a stop-loss order at $19.5, just below the support level to limit potential losses. The initial target price will be $25.8, the previous resistance level, aiming for a quick profit. To refine the strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we'll consider entering a long position at the price of $20.5, with a stop loss at $19.5 and a target price of $25.8. Conversely, if the price touches the lower Bollinger Band, we'll also consider a long entry at $20.5, with a stop loss at $19.5 and a target price of $25.8. This combined strategy leverages both momentum and volatility indicators for enhanced profitability. Based on the historical data and forecast, SKY shows a slight upward trend. The RSI consistently remains above 40, indicating that the asset is not significantly oversold. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. The forecast prices for the next week are slightly higher than the recent closing prices, further supporting a bullish outlook. Therefore, I recommend a moderately bullish strategy focusing on capitalizing on potential upward movements while managing risk. My strategy involves entering a long position when the RSI dips below 40, which has not occurred in the recent historical data. However, if it does, the entry price would be $0.055. The stop loss should be set just below the lower Bollinger Band, around $0.0544 to limit potential losses. The initial target price will be the resistance level of $0.0647. If the price reaches this target, we will move the stop loss to break even to protect profits. If the price continues to rise, the second target price will be $0.0659 based on the forecast data. This strategy combines RSI signals for entry, Bollinger Bands for stop loss placement, and support/resistance levels for target prices, aiming for a balanced approach to maximize returns while minimizing risk. Based on the historical data and forecast, Maple Finance shows a downtrend with recent price fluctuations. The RSI consistently remains above 50, indicating a neutral to slightly overbought condition, with values peaking around 70 and dipping to the mid-50s. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Given the forecast prices are trending downwards, and the RSI is approaching overbought territory, a short selling strategy is warranted. We will initiate a short position at $0.374, placing a stop-loss order at $0.361 to limit potential losses if the price reverses. The initial target price will be $0.358, aiming to capitalize on the anticipated downward trend. To refine the strategy, we will incorporate the support and resistance levels. The current support level is $0.346. If the price reaches this level, we will move the stop-loss down to $0.348. If the price reaches the initial target of $0.358, we will set a new target of $0.355. This tiered approach allows us to manage risk effectively and maximize potential profits by adapting to changing market conditions. This strategy combines technical indicators with support and resistance levels to create a robust and adaptable trading plan. Based on the historical data and forecast, Quant shows a generally upward trend, breaking through the resistance level of $84.4. The RSI indicates periods of oversold and overbought conditions, with recent values trending upwards, suggesting increasing bullish momentum. The Bollinger Bands have been widening, indicating increased volatility, and the price is currently near the upper band, suggesting a potential for a pullback or continuation of the upward trend. Considering these factors, I recommend a long position with an entry price of $80.7. A stop loss should be placed slightly below the support level at $77.1, specifically at $76.8 to account for potential volatility. The initial target price should be set at $84.7, aligning with the forecast and recent resistance levels. To refine this strategy, we will incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price reaches the $84.7 target, and the RSI is approaching or above $80, consider taking partial profits and moving the stop loss to break even, around $80.7. Conversely, if the price retraces towards the center of the Bollinger Bands, around $80.1, and the RSI falls below 50, consider adding to the position at a lower price. The final target price will be $83.9, taking into account the forecast data. This adaptive approach aims to maximize returns while managing risk effectively. Based on the historical data and forecast, LayerZero shows a clear upward trend with consistent price increases. The RSI values have mostly been above 50, indicating bullish momentum, and have recently approached overbought levels. The forecast for the next week predicts continued price appreciation, reaching $1.89. Considering these factors, I propose a long position strategy. We will enter a long position at $1.76. The stop loss will be set at $1.67, just below the recent support and a significant historical price point. The initial target price will be $1.88, aligning with the forecast peak. If the price reaches $1.88, we will move the stop loss to the entry price of $1.76 to secure profits and manage risk. To refine this strategy, we will incorporate the Bollinger Bands. When the price touches the lower band, it suggests a potential oversold condition, which we did not experience recently. However, when the price approaches the upper band, it indicates a potential overbought condition. Given the current upward trend and forecast, we anticipate the price will continue to test the upper Bollinger Band. If the price breaks above $1.88, we will adjust the target price to $1.89, reflecting the forecast. This combined strategy leverages the RSI and Bollinger Bands to optimize entry, stop loss, and target prices, maximizing potential returns while mitigating risk. Based on the historical data and forecast, just shows a slight upward trend with periods of consolidation. The RSI fluctuates between 45 and 71, indicating neither strong overbought nor oversold conditions consistently. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility, which might soon expand, potentially signaling a breakout. The support price is consistently at $0.0404, while the resistance is at $0.0417. Considering these factors, a moderately bullish strategy is advisable. Here's a three-pronged position strategy. First, when the RSI dips below 30, enter a long position at $0.0395 with a stop loss at $0.0385 and a target price of $0.042. Second, when the RSI rises above 75, enter a short position at $0.0417 with a stop loss at $0.0425 and a target price of $0.0405. Third, when the price touches the lower Bollinger Band, enter a long position at $0.0381 with a stop loss at $0.037 and a target price of $0.041. We will allocate 40% of the portfolio to the RSI strategy, 30% to the Bollinger Band strategy, and 30% to the support and resistance strategy to create the most efficient portfolio. This diversified approach balances risk and reward, capitalizing on different technical indicators while managing potential losses. Based on the historical data and forecast, Tezos shows an overall upward trend with periods of consolidation. The RSI consistently fluctuates, but the recent values have been above 60, indicating bullish momentum. The Bollinger Bands have been widening recently, suggesting increased volatility and potential for price movement. Considering these factors, I propose a combined strategy leveraging RSI and Bollinger Bands for optimal returns. We will initiate a long position when the RSI dips below 60 and the price touches the lower Bollinger Band, indicating a potential oversold condition. Specifically, we will enter a long position at $0.606. Our stop loss will be set just below the support level at $0.519, providing a safety net against significant downturns. The initial target price will be set at the recent resistance level of $0.621, aiming for a quick profit. If the price continues to rise and breaks through $0.621, we will adjust the target price to $0.624, capitalizing on the upward momentum. This combined strategy balances risk and reward, taking advantage of both technical indicators to maximize potential returns.